We see that Indian rupee introduced as a global currency. Chinese yuan is being introduced as a global currency. Now we see a lot of transactions taking place in this currency. And at the same time, customers need to be aware of the BRIC countries, that is Brazil, Russia, India, China and South Africa. At the moment, almost about 35% of the global wealth of the economies are being handled by these countries. These countries together, now they are forming alliances and trying to bring new trading systems and trading platforms where transactions can be done without using the dollar. Same way, that is why Indian rupee is being introduced. So we are also part of that. We are doing some transactions with Indian rupees. From the importer's point of view, importers have foreign currency risks because enter into transactions, they open LCs, all these LCs have to be paid in the future. So they carry a risk where if the exchange rate changes, they will have either profits or losses depending on where the exchange rate goes, fluctuates. So what we advise is these customers are that we have products, we can do, the customers can do forward booking, where they know exact exchange rate that they are going to conclude the transaction. So that will allow these customers to price their goods when they put it to the market. Rather than wait until the last moment, at the time of importing itself, they will know at what rate we are going to clear these goods and what is the price of these goods that comes to me when I want to sell it. So with that, if they can add their margins, they will know at what price this good will go to the market. So they can do this analysis and see whether doing the import and doing this transaction is profitable or it can be done. So what they need to understand this moment of time is that the current context is that because of the high inflation that we saw last year, people's buying power has gone down. So therefore, even though after importing, it will be difficult to sell. So they have to understand this. They need to do these calculations and see whether these products, after bringing it in, whether they can sell it. So by doing the forward exchange contracts, we can advise our importers how they can manage their risks. And at the same time, this will allow them to secure foreign exchange for their future transaction. Because a lot of uncertainties are there in the marketplace with regard to liquidity. A lot of events are taking place. Therefore, once they secure their foreign exchange, they know for sure their transactions will go through. So those are the importers. So then when it comes to exporters, they are the other side. They export goods and they receive money. So when they receive money, there is a time lag. They will do the export today, but they will receive the money after 2 months or 3 months or 6 months. So by which time, from today to 3 months, 6 months, the exchange rate can change, either go up or go down. So for them, what we are saying is that, okay, you need to cover your risk. The risk is that making a loss or a profit. So what we advise our customers is that, what business are you in? Are you in business where your primary concern is making profits out of exchange or making profits doing the business? So that they need to ask this question themselves. So foreign exchange and everything, what as a treasury we do is that we give them products to cover their risk. We need to see what are the factors that is going to affect the exchange rate. So a few factors are the inflows and the outflows. So we need to see what are the inflows that's going to come into the country and what are the outflows. So when we look at inflows, we see export proceeds is one of the inflows that we are getting to get. Then the second one is worker remittances. Third big one is the tourism income. And we have another one, foreign direct investments. And at the moment, we don't see that much of foreign direct investments because the country is still not stable. So foreigners would like to see a stable environment, political and at the same time economic environment to be stable for them to enter into the market. So, but saying that, we see big improvements in worker remittances. we see now that a lot of citizens are moving out of the country for foreign employment. So they will bring more foreign currencies to the country. And our expectation is about 6.5 billion to $7 billion will come in this year as foreign remittances by way of worker remittances. And going forward, we see that now tourism is improving a lot. So from last year, almost zero tourism income. Now this year we can expect about $2.5 billion to $3 billion by way of tourism income. So these will add for the inflows, which will make sure that the demand for the dollar is somewhat negated from this inflow that is supply. Now we need to see what are the factors that is going to affect the demand. So all this time there were a lot of regulations curtailing imports. Now we see gradually these limitations or the controls are being taken out by central bank. So going forward, we will see some kind of a demand coming out of imports. So that will be there, provided these goods will be affordable by the Sri Lankans. Because of the current crisis, their disposable income have gone down. So therefore, we need to see how it's going to take place. But at the same time, other big import numbers are the fuel. Fuel bill is huge for the country. So going forward, we can see that weather patterns are changing. We see there's a current drought. And with that, what can happen is that we might have to move into thermal power, which means that we will have to import more fuel to do this. So therefore, because this is needed, if we have power cuts, production and other things can suffer. So if this suffers, our economic upturn may not be possible. So at the moment, what we want to achieve is that our economy to grow, because all this time, first 2 quarters, we see economy going down. But for economy to turn up and go up, the production economy has to run. So the production to run, the power is one of the energy is one of the key sectors. So energy to be there, then if the government has to supply this, they will have to import more fuel. So which means that there can be a situation where that our import bill on fuel can be higher than what it is now. So which can have an impact on the exchange rate. So at the same time, because of the drought, the cultivation being affected, paddy most probably. So what can happen there is that again, we might have to import more quantities than what we expected of the cultivation being affected by the drought. So if these things going to take place, there can be more demand for the dollar. So we need to wait and see what is going to have more weightage. If remittance and the export proceeds and tourism is going to bring more dollars than the demand that is going to be created by these events, we will see that the exchange going down. But at the same time, the import demand, the fuel and the drought being there is more demand for the dollar, we might see exchange rate depreciating. So the other two key events are that stability. We need stability in the economy. So stability has to come through by way of finalizing the DDO, which is there, and now we see that going forward DDO will be finalized. DDO finalization, which is domestic debt optimization, that needs to be finalized. With that, some kind of stability will be there for the local market, local bonds. Everybody will be clear how the things going to move forward. But after that, we will have to do the sovereign bond restructuring. So sovereign bond restructure, as we know at the moment, needs to take place before end of September or October for us to move to IMF by November. So once the sovereign bond restructure is also going to be finalized, these things will be in the public domain. So once that is done, we will see a lot of stabilization coming into the economy. So when this problem starts happening from 2019 onwards with the crisis that took place, thereafter 2021 and 22 were the highest of the crisis. So we saw that liquidity, from a bank's point of view, liquidity is one of the key concerns. So making sure that there is ample liquidity available to do the business and to support customers. We had few committees been formed in the bank to look at these things and have a close monitoring mechanism. At the height of the crisis, we had to make sure that we prioritize the transactions. We prioritize the transaction based on whether it is food, medicine, fuel, and what are the others that we are going to support. So we have to look after our customers as well. But we are happy to say that we came out of it very positively because of the actions we took as a bank by monitoring and managing this. And same time, from our customers, there was a big support. Our customers didn't panic. We, being a big bank, we have a huge deposit base of customers. Customers didn't panic. They trusted us. And we didn't see any deposits moving out. So all this time, even though the economy was going bad, we saw a lot of deposits coming into the bank, which made sure that our liquidity levels were very healthy. So from bank's point of view, how a customer should look at the bank is that what are the liquidity levels the bank is maintaining. Last year we saw Ukraine war. Then Corona, the last stages of coronavirus effects were also there, which affected the global transportation. Therefore, our customers were a bit panicky because they thought that, okay, if something goes wrong, the customers who are making production over here, their supply chain will get affected. Therefore, these customers, what they did was they were taking on the imports and making sure that their inventories are more than adequate. They were keeping huge amounts of inventories to make sure that their production is not going to get interrupted. So therefore, we saw that a lot of inventories being built by the customers. So we supported them as well because as a customer, yes, we do understand that they have to look after their business, and without any interruptions, those businesses have to run. So we supported them as well. But at the same moment, we saw interest rates skyrocketing. Interest rates went from 12-13% to 30% levels, which is a bad thing for customers who are doing business. But I think from central bank's point of view, this was needed to somewhat cool down the economy. The economy was overheating, so many activities taking place, money being there, and a lot of goods being demanded by the customers. But interest rates being higher and the exchange rates going higher, the demand was somewhat curtailed. So those factors coming into play last year, we see the impact of that now. That is why the exchange rate is now very much under control, and the interest rates are now coming down. And going forward, we will see, because of that, more business taking place. So it's very challenging environment what we saw last year, and even this current year, challenging environment. We see that the banks are there to take deposits and to do lending and give advice to customers how to do business in a safe environment. So this year what we are seeing is that the deposit flows are there, but the loans are going down. There's no loan requirements by our customers. So it has been a challenging year for the banks to make sure that this liquidity that is coming to the bank to be utilized. So what we are seeing now is that this liquidity is being pushed into treasury bills or treasury bonds. But at the same time, we are supporting the bank's mission. Bank's mission is that, okay, make sure customer lives better. So to do that, we have to make sure that the deposit rates what we give to our customers will make sure that their income levels, and some of our customers are solely dependent on the interest income. So if we provide them a good return on their savings, customers will stay with us. So those savings are one of the key inflows for a bank. So by doing that, we have introduced many products. Those products are having good returns for our customers. And at the same time, we have introduced products which are somewhat, long tenor products. These are products where they can invest looking at future events. If they have a future event, they can do a target saving so that they know the amount of monies they need, and they do a target saving on the day that they want the monies. That target saving can be automatically achieved. And at the same time, we have pension plans where customers can start doing savings now itself. And at the time they retire, they can have a lump sum, or they can start saving now and start withdrawing monthly after retirement. So all those things we have done. And at the same time, from a bank's point of view, it's very important for the customers and the bank that the treasury manages the bank's balance sheet. So managing the bank's balance sheet where there can be gaps. So those gaps has to be addressed, and at the same time, how we use the balance sheet, because balance sheet management is one of the key things that is there in the treasury, apart from the liquidity and the exchange. So managing the exchange is of a key thing because of the current crisis, but being aligned with the bank's mission and the vision, what we give is that a safe environment for the bank to operate, that is providing liquidity. Key issue is providing liquidity at the right time with the right amounts. So Treasury is one of these responsibilities. We have managed it, and at the same time safeguarding the bank with regard to the foreign exchange movements, and at the same time safeguarding our customers. The customer exposures, customers can go bad if they have unnecessary overexposures to exchange fluctuations. We advise customers of that. And at the same time, for the bank, it's the same thing. If when the bank is having so much of foreign assets and the liabilities, again, the bank also can run into difficulty. So managing those, we have given a stable environment for other businesses to make sure that they use this and do their business and provide these solutions to our customers. From customers' point of view, they need to understand globally the changes that are taking place now. We see that Indian rupee being introduced as a global currency. Chinese yuan is being introduced as a global currency. Now we see a lot of transactions taking place in these currencies. And at the same time, customers need to be aware of the BRIC countries, that is Brazil, Russia, India, China, and South Africa. At the moment, we see that almost about 35% of the global the wealth of the economies are being handled by these countries. These are the countries with highest populations. These countries together, now they are forming alliances and trying to bring new trading systems and trading platforms where transactions can be done without using the dollar. So same way, that is why Indian rupees been introduced. So we are also part of that. We are doing some transactions with Indian rupees, and HNB is one of the banks who can provide customers with solutions with regard to the Indian rupees. And at the same way, we see Chinese yuan is being used to do a lot of foreign transactions, and we are also capable of handling customer transactions in Chinese yuan. So I think going forward, our customers need to be aware of these changes what are taking place globally.